Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
We are back with another episode of The Tech Behind Fintech. I'm your host, Anambio Swagu, and joining me is Tom Mallon from the Fintech Sandbox. How are you doing today, Tom?
I'm doing well, Namdi. How are you?
I'm doing wonderful. I'm excited about today's show because I'm always curious about embedded finance. Today's show, why embedded finance is exploding. Every business is becoming a bank. I think it's going to be an awesome show. We're going to really get into it. Before we do, let's get into some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube, and we also have a private stream going from Instagram. So without further ado, let me jump into my guest bio, formally introduce them, and then we will get into today's show. Tom Mallon is a seasoned professional in commodities, financial services, and SaaS trading technology with a strong background in data strategy and market innovation. He currently serves as the data partner manager at Fintech Sandbox, where he helps early stage fintech startups access critical data and build meaningful partnerships. Previously, he played a key role in launching the trucking freight futures market at FreightWaves and held leadership positions at Global View and ICE, where he led product strategy and growth in energy and commodities. Welcome to the show, Tom.
Thanks, Namdi. Glad to be here.
So, the big question, right? Today's show, like we said, why is embedded finance exploding? I mean, I'm sure throughout the show, we're going to answer that question. But before we get into it, can you help the audience understand what is embedded finance?
Sure. I mean, embedded finance is, in its simplest form, is the extension of banking and financial services into non-bank entities. That's in its simplest form. And what we're seeing at Fintech Sandbox through our startup community is a lot of fintech companies looking to do that, whether it be provide loans, whether it provide cash services, whether it be provide other financial types of offerings to their customer base.
One of the interesting things about embedded finance, in doing research for the show and also looking at some stats, it is proposed to be a $7.2 trillion market size by 2030. That's what, some reports are estimating that, it's going to grow into it. I mean, as what you said, right? Some examples are just non-traditional banks or non-traditional, not even banks, just non-traditional applications, whether it could be Uber or businesses, actually having financial services products within them. I mean, I know an example I was looking at is Uber launched Uber Money. Shopify offers banking products. Even Tim Hortons, right? They have a branded credit card reward system. Just what are your thoughts on that?
Well, yeah, I'm not quite sure where the $7.1 trillion number comes from, but I have seen numbers in the hundreds of billions today, growing at a compounded annual growth rate of anywhere from 25 to 35%. So regardless of what the number is, the reality is that embedded finance is here, it's real, it's growing, and it touches every part of our daily lives. And you touched upon it, whether it be Shopify, whether it be Uber, whether it be Dunkin' Donuts. I go to my Dunkin' Donuts with my app, and I pay for my coffee on my app, and I get my rewards point on my app. And so every stream of our life is touched by embedded finance. And so it certainly justifies a huge market size. And I definitely am seeing and feeling that kind of growth rate proliferate over the next coming years.
What do you think is driving it?
I think a couple of things are driving it. One, data. Data is certainly a driver behind embedded finance. APIs, the proliferation of application programming interfaces make interfacing with partners very, very easy. Technology, everybody's got a phone. So technology is ubiquitous. And people do, I mean, phone is embedded in everybody's workflow and life flow. And so I use my phone for almost every aspect of my life. And so between technology, between data, between ease of linking to other institutions and partners, I think that is a big driver. And again, I think it all comes down to the consumer, what a consumer wants, how they want it. And so those are the key drivers behind the growth.
And it's interesting, in which you touch upon data. I mean, we live right now, you can't have a conversation without talking about artificial intelligence, and everybody's, stuck on the technology, but the underlying goal is that data, so, especially as companies start to develop their own proprietary data over time and the way they can leverage that in different ways. So, as soon as you touched upon data driving, I found that very interesting because the one thing that you see with these businesses that are not financial services business in any way, shape, or form up until embedded finance is that data. They have certain proprietary data with their customers that no banks, just traditional banks, just don't have that level of insight, especially when you start looking at their particular domain. What are your thoughts?
Yeah, no, totally agree. I mean, yes, the applications that are developed, the technology being the cell phone, the amount of data that any company can capture. And I mean, we're talking about granular data about their consumers. That's all proprietary data. And then they marry it with the public domain data out there, whether it be finance data, whether it be credit data, whether it be demographic data. I heard a startup use the term twin brains
Wait,
in
say that again.
defining twin brains, in defining
Twin brain.
twin brains, in defining the data universe. So you've got one half of the brain being that proprietary data that is being captured at the consumer level, the other being the data that's in the public domain, and then artificial intelligence or technology marries the two. And so that to me is a huge driver around fintech, a huge driver around embedded finance is just that data, the proprietary data, and then the data that's in the public domain and how you meld the two together.
That's really interesting. And up until now, I never heard that term twin brains, but it actually, makes sense. At times I look at things from a cybersecurity perspective because that's my background. So, when you look at social engineering tactics, I mean, leveraging public data on a particular entity or a person, right? You could just get a lot of information what's out there that you can use it for different ways. We see a lot of phishing attacks. So the term twin brains used in this light, that's definitely interesting. I like the concept, and then it's extremely powerful, right? When you think about it, because you do have this proprietary data, and you do have data from the public domain from various open data sources you can capture, and when you marry the two, you can really understand your consumer. So it makes perfect sense. Once you have this level of understanding, why not start offering things that you know that they need, right? Everyone needs some sort of financial product. And, what I find really interesting is how it impacts people that have traditionally been X'd out of banking, right? That whole demographic that they don't just use traditional banks. And now you see with embedded finance, as you just described it, they're leveraging financial products.
And that's exactly, I mean, when I look at the profile of the startup companies that come to Fintech Sandbox, the large majority of them are focusing in on embedded finance and or AI solutions that do exactly that. Try to get financial services extended to the underserved markets. And the way they get to that is through the technology platform, being a phone, an app, a web app, whatever it might be, APIs pulling in data from financial data sources or other alternative data sources, and then extending the product and services through embedded finance to the consumer.
I usually wait until after the show and give the guest the time to talk about their company. But in this case, I want to talk about what Fintech Sandbox is doing because I think it's just such a benefit to the startup community. You guys are a nonprofit, and I think it could also lend into this conversation. So can you help us understand what Fintech Sandbox is and how you help early stage startups?
Yeah, sure. So you touched upon it. We are a not-for-profit entity. We are funded by sponsors within the fintech community. We ask nothing in return from a startup company or anybody for that matter in our ecosystem, aside from giving us feedback. And so a startup company will come to Fintech Sandbox in a couple of different ways. They'll either be referred to us through an incubator program. They'll be referred to us by a founder that has already gone through the Fintech Sandbox Data Access Residency, or they'll come to us directly. Once they're admitted into the Data Access Residency program, I, as the data partner manager, will do a deeper dive into their data needs. Now, we've already vetted their startup solution. And so I will spend the time going through their data needs. And we have an ecosystem of 42 of the largest financial data providers, small data providers, non-traditional data providers like weather companies that have agreed upfront that if we make an introduction on behalf of the startup to them, that they will offer them a free trial of up to 6 months worth of data for them to build and test their applications. And mind you, this is a program for early stage startups. And so generally speaking, the profile of our startup is they are bootstrap funded to very low seed funded. They're not revenue generating yet. They have a working prototype of a product, and they're looking to get to the next stage of their MVP. And so that's the service that we provide. And I can speak from my own personal experience. You and I were talking beforehand about me coming to Fintech Sandbox from a startup company. And as part of that, we were building a SaaS data platform. And trying to build that SaaS data platform required us to get data from third-party data providers. So I went to a couple of them. In particular, I was looking for some diesel fuel pricing. And the number that I got was in the thousands of dollars a month for using that data to test. Now, I don't know very many startups that have thousands of dollars lying around on a per monthly basis to pay for data when every day you're thinking about how are the lights going to go on tomorrow. So from my perspective, I saw the benefit of Fintech Sandbox in a real manner from the startup perspective, but I also have the data provider perspective as well, having run commodity and financially focused data businesses at Thomson Reuters, at Interactive Data, and at Global View. So I appreciate both the benefit to the startup, which is real, the benefit to the community of data partners, which is real because we provide to them a real pipeline of potential customers going through the testing process, the free trial and evaluation process, and at the end, hopefully they convert to a paying customer. So our ecosystem provides a real benefit to the startup community and to the whole ecosystem of fintech as a whole.
That's amazing work, that you guys are doing. I want to now understand in terms of or just get some insight from you, right? So, with connecting the data providers and now bringing it back to embedded finance, what have you seen like success stories or with the startups that you've been working with, the early stage startups that you've been working with, in making that data connection when providing embedded finance solutions?
Yeah, so I mean, we have seen, and we've at Fintech Sandbox, we have had over 400 startups go through our data access residency program. About 85% of those startups are still in business in some way, shape, or form today. And mind you, Fintech Sandbox has been around for 10 years. And so we have seen numerous success stories. The biggest success story for me is when we get a founder that exits the data access residency program, either takes the company public, does a nice seed round, is acquired and embedded into one of our larger data partners, as an example, or they exit the program and they themselves bring their company back in as a data provider as well. And we have a number of companies that are doing that. A number of success stories around our program lie around embedded loans, embedded payments. So all embedded types of finance are echoed through our success stories.
Talk about embedded finance. You brought up a good point. So it's really any product within the financial finance vertical, right? So you just touched upon loans, right? Earlier we talked about rewards, and I want people to understand that it's not just just one product. It's every single type of product that a bank would offer. Is that accurate?
Oh yeah, totally. So it can be loans, it can be payment services, it can be insurance products, it can be selling investment products and delivering investment products and advice to underserved consumers. So it does run the gamut of what can be offered through a banking or financial services extended through non-banking entities.
So and when we talk about that, I know there's a deal news article that I was looking at around Walmart partnering with JP Morgan, and you start to see these different partnerships, and you start to see, as we've been talking about, these like non-traditional banking businesses, just in various verticals, but offering those types of financial product. I mean, I know Meta did it. You see certain things with WhatsApp. You'll see certain services within Facebook. You'll see certain things within these various platforms offering banking solutions. And I want people to understand, when you see that, that's embedded finance. So if you went to Uber and all of a sudden they have like some sort of banking product within it to help pay their drivers, I think it's Uber Money, that's embedded finance. And that's really what I want the audience to understand, because it sounds complicated. Sometimes you throw out these different terms, but when you start looking at it as most simplistic form from a day-to-day perspective, right? We all have these apps that we use, and then you start seeing, why is this app offering me a credit card or a debit card or something like that? This company now is offering a savings account, right? I've been using them to check my credit. All of a sudden, they're offering us a savings account. Where did that come from, right? So all of these different things that you see on a day-to-day basis, that's embedded finance.
Yes, 100%. And generally speaking, the services that wind up being offered through the various types of apps and non-traditional banking platforms, they're an extension of what the consumer is already doing. So companies are capturing people's workflow. So they're going to check out using their app, and they're going to be offered the opportunity to buy now, pay later, as an example. A point of sale loan being generated to the consumer, just given the demographics and the data that has been captured on them. So embedded finance, yes, it's ingrained in everything that we do. It's embedded in the technology that we use. It's delivered easily because of the proliferation of APIs that allow for partners to connect directly to the applications, but it also comes at risk. Again, we're talking about a lot of data. We're talking about a lot of proprietary data. You, as a cybersecurity expert, understand that you open up the potential for hacks to take place, and data that you otherwise may not want to have exposed get exposed. So, there are risks that need to be looked at as well. So the fact that banking services are being extended through non-banking entities, it does require a level of security. It does require a level of compliance. It does require a level of know your customer. It does require a level of making sure that your partner is acting as they should, because at the end of the day, you have to protect the consumer. If you don't protect the consumer, you run the risk of damaging your brand, alienating your consumer, moving away from what your core value was for why that consumer was using your app or your service to begin with. So there's lots to be taken into account as it relates to embedded finance and extending banking applications to non-bank entities.
Yeah, let's touch on it, right? I like it. I like the direction. We can start talking about security, right? I think one of the and let's approach it. Let's approach the security conversation in different ways. Number one, you mentioned compliance. So a non-traditional bank, or just a business outside of finance, they have this banking product that they use. So usually, and correct me if I'm wrong, underlying that banking product is a real bank most times that they're working with, right?
Yeah, banking as a service in that regard. So the extension of the infrastructure, the extension of the compliance, and know your customer. So yes, there is a real bank behind.
So, what I've seen, in working at startups and also, building some solutions of mine, when you talk about compliance now, if I'm leveraging a certain product, I can leverage that partner's compliance. I know usually SOC 2 is big in the compliance space. So I'm leveraging now Stripe or leveraging a certain product within my app, right? That's a non-traditional bank, but I'm leveraging through APIs and different services, this partners, I can leverage their compliance and their KYC, because when you go through the workflow, it should connect, my consumer will ultimately be connecting to their service, but it's framed around my app, so they don't know the difference. Is that accurate?
Yes, it's accurate, but there has to be safeguards. I mean, Synapse is a great example of infrastructure. Bankruptcy of Synapse earlier is a great example of where the infrastructure can deteriorate if proper care and oversight is not made. So yes, there always has to be the level of due diligence in understanding exactly what that partner is doing, especially if you are leveraging it.
Okay, so that's a good point, right? Like I always say when thinking about security, right? You're only as strong as your weakest link, especially when you have various partner solutions. So that's one. Number two, jumping into application security, especially when you look at API security. This is something that I've seen over time, and companies are getting a little bit more smarter with it, but a lot of times applications are, security is more focused on front end stuff that the average person can see. You go to a website, download an app, but the connectivity now to go from your app to your partner's app, sometimes that's not as secure, right? Sometimes mistakes happen, like, certain keys are exposed where people who are, or nefarious actors who are scanning your application can now try to basically infiltrate that API and get data on their end. Or, like they said in Batman, right? What Alfred said to Batman during the Dark Knight, right? Regarding the Joker, some people just want to see the world explode. So it could just be a denial of service attack where they just flood your API over the limit, so now no one can use it, right? So there's definitely considerations, and I'm happy that you touched upon that in terms of the risk factor.
Yeah, I mean, yes, there's always a risk, and to your point, if somebody wants to be nefarious, they're going to be nefarious, but you go through the mechanisms that you can. You go through your compliances. You go through on the technical side. You go through your SOC compliances. So there are ways to ensure and allay public fears that data is secure.
That's very important. And we've been talking about APIs a lot within this conversation. As you mentioned before, application programming interface. For people who might not be as familiar with it, can you just explain how powerful this is in terms of helping with the proliferation of embedded finance and having apps, especially early stage startups, leverage all of these partners?
Yeah, so an API simply is a standard way to exchange data between one application and another in its simplest form. So there's a specification, apps are developed to that specification, and it facilitates the transfer back and forth of data in certain protocol. And APIs have been around for a long time. They are the easiest way for technical partners to connect and exchange data in a known and standardized manner.
No, thanks. Thanks for that. I have to get something going, so I appreciate that. And working now with the different early stage startups, as you talked about, what are some of the blind spots that founders or startup execs sometimes misunderstand about launching embedded finance features?
Yeah, I think there's a couple of blind spots. Number one, I think it does center around the data that the correct data sets that are required to test and validate whatever hypothesis you're looking to solve around embedded finance, whether it be payment data, loan data. Also, I've seen instances where what a founder is looking to do really isn't supported by the public domain data today. And so I'm constantly scouring on behalf of our startups new data sources, potentially data sources that are non-traditional. And a good example is we're seeing a lot of entities that are now focused on natural disasters and catastrophe type insurance products, embedded finance. And so they're looking for data that's not readily available in the public domain. So I'm looking for smaller companies that focus on collecting time series around. A good example is hailstorms. Where are you going to find that? So very specialized companies are looking, produce that kind of data. And those are the types of data that some startups are looking to get access to. So sometimes it's really it's looking for data to build a solution, and that data is not readily available, and so it can take longer and more effort to get. But those are some of the areas around the blind spots that are there.
That's an interesting perspective. So I have this idea, this concept that I want to launch. This hypothesis, as you mentioned. Now, I think it could work, right? Based on the research, based on that we did, and so forth. But the only way to know is now to test it with real data. And have you seen companies skip that test or not have as much data as needed, and then just go out and figure it out on their way to launch?
In my limited experience at Fintech Sandbox, no. But I can say this, that I have seen startups come in with one idea And before they leave the data access residency, they pivoted and exit with a completely different, based on things that they've learned going through the testing process, going through the mentoring process with data providers. They've pivoted. So I've seen shifts in solutions around embedded finance. But I've never seen somebody cut a corner. If that's, I haven't seen that now.
And okay, I can see that. So they come in with one idea. This is what we're trying to solve. They start partnering with all these data providers that you guys give them access to, and then they pivot and say, "Oh wow, based on the data that we're receiving, we think that this new idea can work, or we can serve, we could add value in this way."
Yes,
That's pretty.
e-
That's
e- exactly. And so, and that's one of the benefits of the Fintech Sandbox Data Access Residency Program, is that the startups get to work with well-established data providers that are experienced in understanding use cases, experienced in ensuring that they have the data that is actually required. If they don't, then what will happen is the startup will come back to me, and we will go through the list of data providers again, dig a little bit deeper into the data needs, and look for another alternative uh, data provider. Now, mind you, we have 42 plus data providers, and you asked about blind spots. Our startups in general, they come in eyes wide open. They see 42 data providers. They have an AI solution that needs to consume a lot of data, and they immediately want to work with 42 data providers at the same time. And they've got one engineer. So that's a blind spot also. Sometimes the overzealousness of the startup and the founder, in terms of getting access to all of this data, and maybe missing what that MVP really needs to be. And as opposed to working with 42 data providers, I need to work with two. And so that's my job, is to help facilitate that conversation, help focus and prioritize, and help match the founder with the proper data partners to get them
and,
to their vision of what is that next step embedded finance app going to look like.
and for those that don't know, because I know we've been throwing out the term MVP, it stands for minimal viable product.
Right.
So
Yes.
it's the solution that you're going to put out just to test the market to see, okay, does this hypothesis there that I have actually work? It doesn't have all the necessary bells and whistles that your final solution would have, but it's to have something tangible out that you can test with real users. So I wanted to put that out. But no, I can kind of see how a founder could be excited about that, right? It's like, these guys have 42 data providers. We have access to as many, and we have access to as many as we want. Like, you don't limit them, right? If they have the capacity to leverage.
No. Yeah,
To
I mean,
yeah,
if they could work with 42 data providers, God bless them. But we don't. But the program itself, the data access residency program, it's not an evergreen program. So we look at it basically as being a 12-month to 18-month program where a founder will come in, they will work in an iterative manner with a series of data partners, and then ultimately get to a point where they've either proved their concept or they haven't. And so our founders and startups, they're not in this program for 10 years. It's really a 12 to 18-month program.
got it. That makes sense. A question that I was going to ask around that, right? Because you mentioned public data sources. What's a strategy to leverage those sources? Like, how does that work? Like, getting for lack of a better terms, the free data that's out there in the public domain. Like, what are some of your strategies to go to seek that type of data out?
Yeah, so I mean, the strategy really is the entire program of the FinTech Sandbox. And so if you look at it from three basic pillars, FinTech Sandbox operates around data. it operates around community, and it operates around content. And so the data part is really marrying a startup company with a data partner or a series of data partners. And the benefits are real and they're tangible. The startup is getting access to free data for 6 months at a clip, depending on, and that number can add up in terms of financial savings to a startup, depending on how many uh, data partners are worked with. So the savings are tangible and real. The data partner, they get a couple benefits. Number one is they get a nice view as to what startups are doing in terms of and the direction that fintech and embedded finance is going. Two, they get a better understanding around what are the use cases around their data. And AI has been a huge use case shifter for data partners because of what it does around training models, consuming models, opening up questions around intellectual property and whose IP is whose. And so AI has definitely made the industry have to take a look at how data gets consumed. And from my perspective, embedded finance, AI, all that is doing is exploding the need for high quality, clean, reliable data. And so that's a huge benefit to our data partners. So they get a look at the technology, they get a look at the use cases, they get a look at potential companies that they may either want to acquire, may want to further partner with down the line. So you have that. Then around that, we've got the community. And so we've got data partners, we've got founders, we've got investors, we've got talent. So startups are able to leverage all of that as well by being part of our community. And then the third part is really around the content. And through content, access to founders, access to data partners, we put on an annual conference called the Boston Fintech Week, as an example. In September, we will have 3,000 fintech professionals in Boston at the Boston Fed networking, getting access to relevant content, and really understanding the direction that fintech, that data, that embedded finance is all going. So the program is in its entirety. That's what Fintech Sandbox is all about.
That's pretty cool. And let's talk offline about that conference. I know we've been attending different conferences, doing interviews there, and so forth. We did one in Vegas last year, so let's talk offline about that. I didn't know about your the Boston FinTech conference until you just mentioned that. A question for you, right? Outside of the partner data, because you talked about the public data, what are your methods for accessing that data, and what are some of your techniques in terms of getting that data?
So I mean, I operate really within the ecosystem, the known ecosystem of our data partner world. So, but the point around public data, when I get a startup or a founder that's interested in data that nobody in our ecosystem has, um, generally speaking, what will happen is that founder will make an introduction on my behalf to that data partner, and I will work to get that new public data set into the fintech sandbox world. Now, there's a lot of data out in the public domain that people can go and acquire. A good example is if somebody wants some weather data, just basic weather data to test, they can go to National Oceanic Administration Authority, NOAA, and get access to data by scraping a website. That's not really what I propose. I propose really the existing network of data partners that have come into our ecosystem, that have signed pre-negotiated deals that when we introduce a startup entity to them, that they will make available free trials of the data that they've identified. And that data
Now,
spans traditional finance data. So stock, bond, equity, tick data, end of day, history. It consumer demographics, loan data, payment data, all of that data exists within our ecosystem. And so, in general, when a startup comes to us looking for data to validate what it is they're doing around embedded finance or fintech, we generally speaking have a data partner or multiple data partners that they want to work with, and data partners that want to work with that startup.
Interesting stuff. Because I was still thinking about what you said earlier about the twin brains and marrying the public data with the partnered proprietary data that they have. So that concept stuck in my mind. So I wanted to kind of understand, how would one just go about? I mean, it's a research effort, right? Like
Yeah, no,
finding
no, absolutely. And I see startups that's how they've gotten to where they are as they're coming into the data access residency. So they on their own have secured data, whether they've gotten a free trial from a data provider because they're a student, as an example. And so that's their student status has gotten them access to data that they've been able to use to prove out a point. Or they've gone to publicly sourced data through the internet or other third party providers and have done some of the early stage legwork, but now have come to the data access residency and now are looking for more in the way of the clean, professional financial data that we offer through Fintech Sandbox.
that makes sense. Kind of want to switch gears, right? I know one of the one of the industry issues when you start talking about finance in on a non-traditional financial businesses, as you mentioned, Walmart, Uber, et cetera, taking on financial products. I remember reading an article like a while ago. I even presented it on this show like maybe a year or two ago. And for lack of a better word, right? Traditional finance thought it was just unfair that these companies that are non-traditional banks are not going through the same uh, regulatory processes that they have to, right? But they're launching financial solutions. Do you think it's gonna come? It's soon gonna be a storm of heavy regulation towards these non-traditional banks while
Yeah,
using credit finance.
yeah, I hope not. I hope there's not a regulatory storm. But that said, I do think, and it actually comes back to the premise of what we're talking about is, is everybody looking to become a bank? And the answer to that question in my mind is no. Um, However, they are looking to extend banking and financial services products and solutions to their customers. So they want to get to the point where they partnered with somebody that is regulated, somebody that is compliant from the banking side of things, um, but are not themselves yet willing to go and become a bank. And it's all because of the regulatory risk and the regulatory burden. So, is everybody trying to become a bank? No, but they want to offer banking services. And the answer is yes. And they do that through embedded finance, they do that through banking as a service. They do that through partnerships. They do that with the exchange of information flow through APIs for KYC and compliance and account data. So that's my view of where embedded finance is.
Where do you see it going in 5 to 10 years?
Well, I don't see it slowing down. And again, where's it going to be in a year? I mean that I struggle where things are going to be in a year, just given how quickly things have moved in the past 2 to 3 years. And so again, technology is moving at breakneck speed. I mentioned the fact that data is core to everything that's going on. And so in my mind, it's, can the quality and the reliability of data keep up with the demands of technology? I mean, that's a question in my mind. And where is all this alternative data sources? Where are they all going to come from? That's another one. But I don't see things slowing down in any way, shape, or form around the extension of financial services through non-finance applications. I want them. I think the market wants them. They're comfortable with them. I think that there's huge markets that are still untapped. I mean, we go back to the underserved in banking, in investment, in knowledge. That's one aspect of it. I think another opportunity, a big opportunity, has to center around debt, and especially around credit card debt, especially around student loan debt, and the implications to the demographics that touches. I think just those two areas, to me, fuel growth in embedded finance for the foreseeable future.
Think that's a bar. I mean, just in America alone, I think we have the highest consumer debt globally. Like you you have people literally living off of credit cards. So that's major what you just said.
Yeah,
You
and
really,
we're seeing startups coming in with very novel ideas around that, and a lot of it is, and this is again where things can go in terms of, you know, our company is going to become a bank, because I see in just logical progression that these companies, they want to come in and they want to help service debt, as an example. They do that through a couple of ways. They do it through better education, better tools around budgeting. Um, Ultimately, they want to be an issuer of a credit card. So they're either going to become a bank or they're going to partner with somebody. So they go down this path, step by step. And it all starts with the data collection and the data science around their audience, the consumer, their habits, how to change those habits. That's the beauty of, in my mind, what embedded finance can be all about.
it's funny as you were talking, and I was thinking like after embedding for like a startup, as they grow and embed more products and leverage banking as a service, eventually they almost become indistinguishable from a bank, right? When you start having all of these different products within your platform and people are leveraging it to save, to manage their debt, you're issuing new credit cards, you're having different other products that they're now they're leveraging. It's interesting, as they add more services.
It is, and then that comes full circle to your question prior about are we going to see a storm of regulation? And so again, I hope not. But at the end of the day, as embedded finance continues to evolve, regulations will continue to evolve. Consumer safety needs to be in place. Data privacy needs to be in place and continue to grow. So my hope is regulation can, and it never does, can keep up with the pace of technological change. That's a wishful think on my part, but that's the reality, is that the market is moving at a substantial pace, and the regulatory regimes need to move as well.
I wonder what data sets the regulatory bodies are using, right? Because uh, that I just thought about something as you were talking about regulation, because like to even for their solutions, as you start thinking about it, right? You're not going to it's hard to fight a gunfight with a knife, right?
Yep.
So it's like you're leveraging the people that you're trying to regulate are leveraging technology that you're not even leveraging yourself. So that's a whole nother conversation. But
But it
Final
actually
question.
it's actually a great point, and I often think about it when I'm talking to a startup, and I see it's going down that path that, well, what is a regulator going to think about this? And then I think about, okay, what are they doing, meaning the startup? What is the data that they're collecting and ultimately going to output? And is that a valid input back into the regulatory body? So I see, much like I see our startups as they nurtured through our program, and hopefully they exit successfully, and then they come back in and provide data back to new founders. I see the same possibility of these new firms as they're building new embedded finance solutions, ultimately being data inputs back into the regulatory regime.
No, and that's what, as you were talking, and we started to bring that up. That's what was on my mind as well. So, and I think we should, I think that'll be a great future conversation that we can have back on the show. I haven't talked to someone who's as big in data as you, in terms of how you're helping leveraging it to help these early stage startups, and I like it. And I want to have various conversations, especially what you guys do at the Fintech Sandbox. My last question, right? I'm a business executive, and I'm looking to leverage embedded finance on my platform. What's your one piece of advice?
It is know your consumer, and that's it in a nutshell. You need to know and understand how your embedded solution is going to be used and is going to be leveraged. Because if you don't, you're either going to overwhelm or miss the mark. You're going to lose the stickiness that you're hoping to gain from embedding finance, and you may confuse your solution. So it really does come back to understanding your consumer, understanding the consumer workflow, and where that piece of embedded finance fits in what they're doing.
It's great advice. So, I mean, we did this earlier in terms of going through Fintech Sandbox, but what we do at the end of our show is I get off the stage and I'll let you talk about your company, how people can find you, and so forth. So I'm going to do that right now.
Okay, so Fintech Sandbox can be found at www.fintechsandbox.org. It will list what we're all about. It will also provide a list of how you, if you are a startup or a founder, can access our program. And it'll also list the data partners that we work with. And so go to our website, you'll learn more about it there. You can also reach out directly to me. I am Tom Mallon at fintechsandbox.org if you want to learn more about our program.
Sounds good. Thank you very much for your time today. I have to also say, subscribe, guys. Tech Behind Fintech. We have a newsletter every week. It comes out. We have great news, keeping our fingers on the pulse of the fintech industry. Also, you'll get an update on our upcoming guests for the show, and we'll give summaries of our previous guests. Let me put that on the website right now. I mean, on the screen right now. As I always say, whether you're watching the show live today, whether you watch it tomorrow or next year, we appreciate your viewership. We appreciate the messages and the support. And we look forward to providing you, more episodes with great experts like Tom and so forth in various aspects of fintech. Tom, thank you very much for your time today. I consider you a friend of the show. You're of our over 200 episodes, this is the first episode where we really dived into the data aspect. We did talk about embedded finance previously, but I love how in this episode, the importance of data and how it can help early stage startups and how that ties back to embedded finance. So I took some lessons from it. And I want to thank you very much for your time today. And I look forward to circling back, and we can do future episodes covering different topics within the this fintech domain.
Thanks, Nandi. I really enjoyed our conversation, and thank you very much.
You have a great weekend.
You as well. Thanks.
Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.